No, I think the interest you see from the Nordics in the direct market is also evident in the indirect market. There's been quite a lot of successful fundraisers for Nordic funds, and typically, I think the domestic or sort of the Nordic fund managers tend to have a higher risk profile than core. You'll see, a lot of the core money would come in, I think, primarily directly, whereas a lot of the fund managers, as I said, take on a slightly higher risk profile, as we do. And then if you, in that perspective, look across the various markets, we see, Hella was giving a lot of praise to Finland just now. We do the same, but for partly a different reason. We see the opportunity there to get our returns. We get a sort of a margin between core and value add that's sufficient to create our returns. We see the same thing in Norway or Oslo at the moment. On the back of the fall of oil prices, the depreciation of the Norwegian krona, we are again seeing opportunity there to get our kind of returns. Speaking about the office sector, in Copenhagen and Stockholm, that's so much more difficult to get value-add returns out of well located offices. In Sweden, we see that kind of opportunity much more in the retail sector, for instance. So your question earlier about where are the opportunities or what should one be doing in the Nordics, I think it boils down to what has been said here before. I think it depends on your profile as an investor, and if you're a value-add investor as we are, then you simply find the countries and the sectors where you get your kind of return, taking into account. Also, I think what Arvid here spoke about before, liquidity in both the leasing market and the investment market. If you're value add, you hold your asset for a defined period of time, and you want to make sure that you can execute on your business plan during that period. So lease up the asset and sell it again. So you have to stay in areas where there is sort of market activity throughout the cycle, basically.